We are thrilled to be hosting this virtual event tonight. For those of you who might be your first time attending one of our ACREN events, I just wanted to give a quick rundown of our mission and our purpose. We are a community of real estate professionals focused on investments in the Georgia and greater Southeast area. The group has been hosting events for the last couple of years, and we have many experienced real estate investors in the group. And our mission is to provide a forum and events for ongoing networking, education, and collaboration in the real estate investing world. Most of our monthly networking events are in person at Hudson Grill in Sandy Springs, but tonight we wanted to offer the chance for others to join who might be outside of the Atlanta area. We have a Facebook group and a WhatsApp group in which we stay connected. And in it, we're posting, investing articles, upcoming meetup details, prospective deals, and miscellaneous questions that can help and assist others in their investing journey. If you'd like to join either of our Facebook or WhatsApp groups and stay in touch with us further, there are QR codes on each of our virtual backgrounds. So feel free to use those to get connected. Our next in-person event is scheduled for Wednesday, April 16th at Hudson Grill in Sandy Springs. For tonight, our agenda is pretty simple. We have a wonderful guest speaker who will be sharing a presentation with us on infinite banking. Then we'll offer a Q&A session for participants to ask the speaker any questions they might have, and then we'll break out into smaller breakout rooms so that we can network and share contact information and ideas. And if you have the ability to turn your camera on for this event, especially during the breakout rooms, feel free to do so. It will further help facilitate connection. So with that, just wanted to kind of introduce myself. My background, my name is Susanna Jagodzinski. My background, I'm a commercial real estate investor and developer. I have invested in multifamily properties, and I'm currently working on a couple development deals in the Atlanta area. I started out my career in architecture and then transitioned into commercial real estate development and then investing. I've done a lot of asset management, project management sort of work, including for overseeing various projects, including multifamily, retail, office, and single family. And so with that, I guess I will turn the mic over to each of my co-hosts to let them introduce themselves and give their backgrounds. And then Philippe will be introducing our guest speaker for tonight.
Hello, everyone. This is Ben Johnson. Good to see you on. Thanks, Susanna, for the great intro. And my background is I'm in the live entertainment business. I've been in live entertainment since my early 20s. I'm with a circus, actual real life traveling circus. But I started investing in real estate back in the beginning of 2018. And even though this group is focused on Atlanta and in the Southeast, my deals are currently out in Texas right now. And but working within this group, it's a great platform, and we've been able to make a lot of great connections, and looking forward to learning more about infinite banking tonight. Andrea?
Hello, I'm Andrea Casson Galiano. I live in the North Georgia mountains, so just barely in Georgia, 2 miles from the North Carolina border. After too many years at AT&T, I retired and have been doing commercial real estate for 3 years and have really enjoyed it. This group has been very instrumental in anything I've accomplished in commercial real estate. So thank you all for joining tonight. I think you're really going to enjoy the topic and learn a lot, and hope to see you at future events. Barbara?
Yes, good evening, everybody. Barbara Heil-Sonneck, very Southern girl. You can hear the accent from Germany. I have been in real estate for over 20 years. I'm actually coming from the corporate world, where I was setting up organization at the local and then global level. I could transfer some of the skill set into the real estate environment. I'm running several companies. I'm a LP and also channel partner in several deals, and also actually in one development. One of my, somebody is here as well from the other development. I have deals here in Georgia, land development deal, and is here in Georgia as well, and then also in Texas. Outside of that, I'm into technology space surrounding the multifamily space and developing applications supporting the multifamily environment. Thank you.
I
Philippe?
guess it's my turn. Yeah, thank you, Barbara. So my name is Philippe Schulligen. I'm the co-founder of Boost Capital Group, and we help busy professionals and business owners in growing their wealth through passive investments in alternative assets. We are mostly focused on commercial real estate, particularly multifamily and self-storage. So co-host here of ACREN for many years. We have a great team. We're trying to put together exciting events for all of you. And tonight I'm very, very excited to have my friend Madhavi present to us the infinite banking world. It's something actually that I started myself when I discovered this world of personal finance and so on. I started a policy about 7 years ago, and recently, prior to this meeting, when I met with Madhavi to prepare, she made me realize there were a few things I could do to improve it. So, she'll do a good job, but also, I want to recognize that we have several powerful women in real estate here around the camera. And it's always a great, I have 2 daughters, so for me it means a lot. And moreover, like Barbara, you may have heard a thin or very slight foreign accent. And you'll hear from Madhavi a little bit as well. So we are first generation immigrants to the US, and proud to be here and happy to be here. And I will let Madhavi introduce herself a little more and enjoy the discussion. Just for housekeeping, please make sure to stay muted during the presentation. We'll do Q&A at the end. You can write down any question you may have in the chat, and we'll go over that after the presentation. Madhavi?
Absolutely. Thank you so much, Philip. First of all, that wonderful introduction. But my goodness, what a rich host group that you have. I mean, everybody who's a participant here, they must be really proud, and whatever content that they're getting from you must be so rich. So I'm honored to be in this group, to be presenting what I am more passionate about. So thank you so much for invitation, first of all. Is it okay if I go ahead and share my screen?
Go ahead.
All right. So yeah, let's start from the beginning here. We are talking about the infinite banking, making your lazy money more efficient from the banks, right? So I'm Madhavi, as Philip mentioned. I'm the president, wealth strategist, and also podcast host at Think Outside the Stock. So a little bit disclaimer before we as always go ahead is this is not a financial tax or legal advice. I'm not a financial professional or a legal lawyer or a tax professional. So please seek that advice. And I'm a very numbers person. I use a lot of examples in my presentations, in my trainings, in my education. So please remember those are point in time, and based on that scenario, So do not apply that in your case. If you would like to have your own scenario, I would be happy to jump on the call. So this is just information education purpose only, and there will be a lot of information, lot of education. Be ready to take your notes. I love to, have a lot of information here. So once you have the Q&A, just jump in and ask your questions. You will have definitely a lot of questions from this, right? So infinite banking, just getting a temperature of the room. How many people have really heard about infinite banking? You can raise your hand, just thumbs up or whatever. All right, so one, wow, that's two, three, probably, yeah, three, four. All right, so at least, I would say 20-25% of the group has heard about internet banking. So the first question I always ask that if you have heard about infinite banking, or have you implemented it, and why not? So these are the four answers I typically get. No, I've never heard about it. I think about 50% plus, probably about 60% group here is in that category. No, I have heard it. I haven't implemented it because I do not understand it. That's very common. I have heard it, but I have heard that it also takes time. I mean, it's one of the biggest myth that's associated. And I just don't have enough time. I'm just so busy. I just do not have time to implement it. So if you are one of these buckets, hopefully this next 1 hour is going to help you to come out of it and start taking that action. Any small action is beneficial, right? But before we go ahead, I always like to talk about the person behind the heart behind think outside the stocks, really. And I quite often say that we all have uncommonly common story. And, Philip here was talking about the first generation immigrant, I think there's a bits and pieces of each of our stories is kind of relatable, and that's what we resonate with. And, I'm sure even in the audience today, you will have bits and pieces of my story, right? So here is it where all began when I came to this country, with two suitcases, 9,000 miles away from my country, from my birthplace. A lot of commonality, and a lot of people have been the first generation immigrant, right? So made up great, had a house, had first baby, car, living an American dream. But then 2008 happened. 2008, when I was pregnant with my second child, both me and my husband, by the way, working at the same job, we got to know that the next Friday is going to be our last day on the project. So we took that market impact, the house impact, real estate was going down. We have to move from Sacramento to Austin, and I'm here in the beautiful city of Austin. I know many of you just mentioned that you have real estate in Texas, so Austin is a great place to be. But anyway, we rebuilt ourselves in 2008, but then again 2015, working in like one of the top 5 consulting. Barbara mentioned, coming from the corporate world. I came from corporate world too. So 2015, because of my health, I had to pull that plug from corporate, and my 6-figure earning came literally like a cliff dropping in, right? So what do I do next? My kids' education was daunting, and I'm thinking that, hey, I don't want to compromise on their education based on how much money we have. Being in Texas was helpful, being in Austin was helpful, but not that much, right? So really, I started my financial freedom journey in the reverse order. I had no job, and then I started thinking about building that passive income, right? So that's when I started about real estate. Real estate, that's long story, started as a landlord, started building, came across two strategies: the multifamily syndication and the infinite banking system. Infinite banking system, quite honestly, I was super skeptical. I'm very analytical, like many of you. I'm a very numbers person. I have to like look at my numbers, convince myself to do it. And I see Philip saying yes about it. So yeah, I think a lot of people, a lot of us are analytical. And real estate syndications, however, on their side, I was excited about it. And I was mind blown when I got to know about the strategies and how it can help hand in hand. I was mind blown to know that why the strategies are not known to common people. And actually, if you look at it, syndication is more commonly known, but not the infinite banking yet. So it made me restless. And whatever makes you restless, that's the change that you're supposed to bring in the world. So that's why I started think outside the stocks and started implementing these two strategies, not just implementing, but education was the key, because education was what was lacking even for my journey, right? So that's why I started think outside the stocks, and my purpose really is the mission. I'm on a mission to change financial trajectory of one family at a time, one family at a time, and thousands more to go. And that's my beautiful family here. Eventually, I also formed a community, which is a connected capital community. And Philip is, is a great member of this community as well. We are like-minded people, fund managers, capital risk partners come together to bring really, really high quality investments in our funds. But really, my approach is a twofold here. It's always the education first. My superpower, I think, is simplification, and hopefully you will see that today. But it's really a holistic perspective, right? Understanding what your goals and objectives are. And I think about it as a wealth in a vault, right? So start thinking about foundational, which is your saving strategy, which is your guaranteed growth, and start making that risk managed investments in real estate, diversifying in more risk managed asset classes, which are tax efficient, right? So with that, I focus on not just the financial freedom or passive income, but it's about stepping back from the eagle's eye perspective. And you'll hear that a lot today. The eagle's eye perspective is to grow, preserve, protect, and pass your generational, and that's generational wealth. And that's what I call, the wealth in the what. So really, that's what it is. And you have been on this meetup, and you have done a lot of meetups with this great group here. So I'm not going to talk about why you are here. I can go into really basics about, oh, you need passive income, or you need tax advantages, or you need some kind of a passive income to have that support, that hedge for the fluctuating income, and you need to start thinking about retirement. All that, but I'm gonna go beyond that. My specialty is always dig deeper and ask the right questions. So I'm gonna scratch that surface, and I'm gonna talk about your blind spots in your wealth strategy. One of my most favorite famous quote is, "We thought we had the answers, but it was the questions that we had wrong," by Bono. So really, we need to ask the right questions to even get to the right answers and understand the right problems, right? So let's ask the right questions today. Let's understand your blind spots that you may not have known about it, or may not have thought that it is going to be your blind spot, right? So that's really, what we're going to talk about. Blind spot number one, wow, your wealth destroyer is your family. Can you believe that? I'm going to take a pause, let that ponder a little bit for you. But truly, family, and we learn this from what I call is the financial fathers of this country. You, my friend, in this generation, you have started building step by step wealth for your family, right? This could be your first generation, second generation. But I know I have worked from scratch in this generation to start building that wealth, right? When I came to this country in 2001, I did not know that I could be this successful, and many of us are like that. Same thing with financial fathers of our country, right? When we talk about the Cornelius Vanderbilt, we talk about how much wealth he had when he passed, right? He worked really, really hard. 200 million, that's about 1.4 billion in today's dollar. But let's talk about how much wealth really get passed to the seventh, eighth generation. And Anderson Cooper, a famous media personality, he's actually the seventh, eighth generation. 1.5 million is what he inherited from his inheritance. So really, this billions of dollar and 1.5 million, it's a lot of money. But if you look at what it got inherited, it's really peanuts, right? Let's talk about Andrew Carnegie. Tremendous respect, because his main focus was philanthropy. He had $4.8 billion in today's net worth, and he focused on philanthropy, built libraries, colleges, schools, and all the wealth that he had, he essentially moved towards that philanthropy directly, not from the cash flow directly. And there are no one millionaires from his generations, right? But on the other hand, John D. Rockefeller, $9.6 billion net worth he passed through his hard work. 150 plus heirs. Today's net worth is $11 billion. That's known. There could be, some trust, some other LLCs, etc., that are not known. But multi-million dollars in charity every year, and this wealth is increasing year after year. So really, what's the tool from the wealth is toolbox, and infinite banking is one of that tool, right? So we're going to talk about that. You are very savvy investors. I'm not going to talk about your next wealth destroyer, which is your second blind spot. which is your tax leakages. But I'm going to dig a little bit deeper into that, right? As Robert Kiyosaki, our rich dad of the country, he created these quadrants. We know very well that, who pays more taxes and who, the investor kind of can end up paying the zero taxes. So I don't want to focus too much upon that, but let's talk about what is the true leakage of your taxes. So let's take a look at 50,000 extra income, and I'm going to consider three tax bracket, 25%, 15%, and 0%. If you save these taxes, whatever you're going to expense and send as tax, due, if you have compounding 7% in 10 years, the difference between the 0% and 25% is approximately 200K. So it's not the money that you're losing now, it's the future growth of that money, the future opportunity of the money. That's what you're losing right now. So that's your blind spot number 2. The number 3, right? We talk about the tax deferred accounts. We want to save taxes. So 401k, the retirement accounts, that's where we stuff our money, right? Let's talk about the deferred taxes versus, saving the taxes, right? Say you contributed for 25 years into these retirement accounts, right? You say contributed 500K conservatively. You save taxes, yeah, right? Maybe in the top tax bracket, 37%, 185K is what you saved. Now, say this money triples, it should at least triple in that 25 years, right? So if it triples and you need to withdraw over the period of time $1.5 million from that growth, now even at the lowest tax bracket, your taxes due are 330,000. So really, I'm asking you the question, when you're saving in today's dollar, what is your tax implication that's going to be in future, right? So the retirement accounts is really IRA's way, that's their strategy to have the future checks coming out from our accounts over the period of time. But I really want to question, again, digging deeper, I really want to question that what your today's tax bracket is. Do you know 20 years down the line or whenever you retire, what that tax bracket is going to be? So let's talk about that. Let's talk about the tax brackets, the marginal tax brackets that we had in this country. That's your blind spot number 4. I'm going to give you a minute to grasp this. I love history. I love numbers. And historically, these are how the marginal tax bracket has moved in this country, right? So as you can see, maybe it started stabilizing around, like little before 2000, but not too long ago, the marginal tax bracket were, about 70%, the highest top tax bracket, right? This is mind blowing to me, right? But wait a minute again, let's dig even deeper. The Secure Act, which is essentially how your heirs can distribute from your retirement accounts. If it is your spouse, they have 10 years to distribute. So they have a choice to spread it over 10 years. If you have, say, $2 million, they can distribute 200K. But if it is your kids, they have only 5 years to distribute from it. So now imagine at the top tax bracket that they are earning money, if you left them $2 million distributed in 5 years, they have 400K to withdraw. So what is that tax bracket is going to be? Humongous, humongous. So show me some love and show me some, chat responses here if this is going to be like an information that you never thought about it, right? Let's go to the blind spot number 5, right? Your estate tax exemption. How many here, just give me a thumbs up in the chat window. How many here think that estate tax is not going to be my problem because currently the estate tax exemption limit is at 13 million or something. I will never have that much amount of money and estate tax is never going to be my problem. Just show me in the chat window how many people think. Okay, so nobody thinks that that is going to be your problem. All right, let's talk about it. So estate tax exemption currently 13.6 million, and anything above that is a 40% tax, right? So you and your spouse, between you, both of you, you have, good 27 million probably that exemption limit that you will have. So probably you're thinking that, maybe it's never met. I'm never going to have that estate tax problem. But do you know that this is actually supposed to sunset 2026 January 1st? Of course, with Trump administration, we might see actually some extension about it. But let's look at the history of this exemption limits. Again, 2001, 675K, anything beyond that was 55% taxed. So if you pass with anything more than 675K in that year, they had taxed 55%. So going down, it was right before when Trump bumped up this limit in 2018, it was at 5.4 million. So depending on who is in the administration, this limit is going to fluctuate. You can time your retirement when you retire, but can you time your death when you are going to die? Who's going to be in the administration and what that tax exemption limit could be? Very well, if you die, and it could be 2 million, it could be 5 million, it could be anything. By the way, the best time to die was 210 because it was repealed for modifying the carryover basis. But we are not dead, so bad news. We are alive, so this is going to be our problem. So really, can you time your death, and you're going to have that estate tax exemption problem, right? So that's the problems that I like to talk about. Today, we are going to focus on infinite banking. Let's focus on our problem about our savings. How many are happy about, putting the money in the money market account, and maybe they're getting around 5% or a little more, a little less in the money market account? But let's talk about that, how we earn, save, and invest our money, right? Typically, we earn our money through our W-2 income or rental income or cash flow from syndication. We save to put, some money about debt management, retirement accounts, emergency fund, and we invest in high yield savings, stock portfolio, maybe diversified real estate. So that's how typically it looks like, right? The emergency funds and the high yield savings CDs, that is the topic of the discussion today. That is the focus. We are not going to focus on your risk managed investments. We are talking about the foundational guaranteed growth, emergency funds and CDs that this should never ever evaporate, right? So let me ask you two questions about your savings, right? What is the problem about your savings? Let's talk about that. Let's talk about the interest that you're getting. You are getting an interest maybe about 5% today, but few years back, 3 years back, it was less than 1%. So you have a first problem, that's fluctuating interest, right? So even if you're happy with the interest that you have right now, the problem is always that fluctuating interest. The second thing is tax liability. So what is the actual interest that you're actually paying, right? So if you are that, 28% to 37% tax bracket, maybe your effective interest from that 5% could be just 3% or 3.5%. Let's talk about inflation. Inflation is about 3 to 5%. So if you apply on top of what your effective rate is, you're basically net zero or net negative, right? And moreover, are these institutions that you're putting, they are FDIC insured, but are they stable? Because when you see that a recession coming, one or the other bank just goes belly up, right? So the question to ask is your savings serving you, or is it getting stagnant? Is it net negative, net zero, or getting stagnant? And let's solve that problem, right? So a question to summarize all the problems that I just talked about is number one, generational wealth depletion, your tax leakages in your savings account, your low interest or tax growth in the savings account, of course, insecure and volatile banks. One thing we did not talk about is your asset protection. If somebody sues you and you have cash lying in your savings account, who gets the first dibs into that account, right? Your creditors, they're going to get access to that account. And then your estate tax problem. So let's talk about how we can build a strategy to cater to all these problems, right? And on top of it, when you have your savings, say 100K, 200K sittings into savings account, are they providing you any additional benefit? And you must ask me that, Madhavi, what additional benefit you're talking about? I will get there. So bear patience with me. So let's talk about the think outside the stocks approach. I talked about that eagle's eye perspective. I like to look beyond the financial freedom, passive income, and changing your perspective. You will hear from me again and again, change your perspective, change your perspective. Look at it from the eagle's eye perspective, because when you are in a pond like a frog and you look around you, you see your problems and you see your solutions. There's rocks, there is waters, there is, leaves probably. There is immediate problems, immediate solutions. But if you look at that same pond from eagle's eye perspective, now your problems are different, but hey, your solutions are different too. You have many more solutions, right? So again, with that, it's about beyond passive income and financial freedom. It's about growing preserving, protecting, and passing your generational wealth. So let's talk about that financial blueprint like wealthy. What did Rockefeller family do differently that we need to come in and think about it, right? So first of all, many people, many investors I talked to, they do not have the foundation, and that needs to be your risk-free foundation, zero risk, absolutely no risk, guaranteed growth. That's where your emergency money protection and other protection lies in your financial pyramid. So this is a Maslow's pyramid structure, and I'm talking about wealth strategy in this structure. So foundation needs to be strong. It's like your house foundation. If you have fire or rain or something, when even we say that the house burned down to the foundation, if you have the foundation, you can literally rebuild everything. That's how you should look at your savings, that your foundation is strong, right? As you go up in this pyramid, your risk is going up and your control is going down, right? And that's when you start building, probably investing yourself in your education, in your business. Then you do some direct investments, maybe rental investments, some indirect investments like syndications, some risk managed investments. And on top sits the speculative investments. Now you all are here, you all are savvy. Maybe you have that diversification outside of the stock market, but really, when I see most of my investors, they have their pyramid upside down. They have most of their money sitting into the speculation, and there is no foundation, there is no savings, there is no guaranteed growth built as a foundation to them. So in your mind, you know your truth, put your money, your wealth strategy in that pyramid and see where you lie, right? Other than that, really, the four pillars that I call it is the life protection, the tax planning, asset protection, and estate planning, right? So we do provide some solution about life protection. We do provide some, partnership with estate planning, tax planning, and asset protection is not something that I do because I'm not an expert in that. But we have some, connections, some references that we can always refer to you. But again, this is the strategy for the top 1% to grow, preserve, protect, and pass their generational wealth. That's what we are looking at, right? So our focus today is not going to be risk managed investments. Our focus is going to be purely on that foundational, which is risk managed, guaranteed growth, creating your own banking system where you can have your lazy money do some really, really hard work for you. So let's talk about that. Let's talk about infinite banking. Now imagine a black box. Imagine a black box saving strategy which instead of your banks, the problems that I just talked about fluctuating interest rates, about having to lose taxes and having the inflation work against it, how about a guaranteed growth that is better than bank, which has been proven years over years, even through Great Depression, even through 2008 and all the, the lows of this, the market cycle. How about it provides you tax-free growth, just like your Roth, but it can also have tax-free withdrawal using some specific leverage strategy. How about you can contribute to it without limit? So unlike your 401k or 529 plan, you create your own limit to contribute it. So you're not restricted to 20k or 200k or whatever you want to contribute to. How about it is liquid for you to use for any purpose at any age? There are no credit checks. There is no requirement that you can access this money directly, and it is liquid to access for your business purposes, for your retirement, for your AC that gets blown out, or your business expenses, right? So how about it is liquid for you? How about it provides you automatic asset protection in most states, that if some creditor comes in, they cannot access this money even if there is a 2 million sitting in there. And how about you can actually create an income tax-free generational wealth strategy. So unlike your retirement account, when you pass this generational wealth, there is no income tax due on this. So this is what the infinite banking strategy is. But on top of it, really, this strategy has been existed for 150 plus years. Some institutions are even older than 150, like 170 years, never lost money, even during the Great Depression. And this protects your biggest asset, which you haven't thought about, is you. You are your money making that golden egg, that golden goose that's producing that golden egg, and it protects you, your biggest asset, and that's you. So that is essentially what infinite banking structure and system that we're going to talk about. If you have any questions, Philip, I don't know how you guys want to do the questions. You can take the you know,
Leah,
the
I really don't even have other questions. I did not think you was about to kill yourself.
We'll take questions in the chat for now, and we'll go over that at the end.
sounds good.
That'd be okay.
Perfect. Perfect. So let's talk about behind the curtain. What exactly the infinite banking strategy? Let's take out that black box. So infinite banking, now every word I say is very, very important. If you want to take a note for it. It is strategically structured, very important, strategically structured whole life product. So not any life product, whole life product, not term, not IUL. It's a whole life product with mutual company which pays dividend. What you do is you create a strategically structured product, you overpay into it, it generates cash value for you, it pays dividend year after year, and when you overfund, you get the dividend on that overfunded amount as well. And when you actually want to use it, this is going to be your life insurance. Typically, life insurance benefit, you never see that dollar till you are dead. And that's not the dollar. You think that you're doing it for yourself, but in this particular way, you can actually live your life insurance. You can use that cash value for any purpose, anytime. It has easy access, it's liquid, and on top of it, it protects your life, right? So this is what it's going to be about the infinite banking. But wait, when I saw this, I was like, no, I was told that you can buy term and invest the rest into the investment so it can grow for you. So I'm going to challenge that myth again. My perspective is again going beyond that superficial level, right? Going at the eagle's eye perspective, which is about growing, preserving, and protecting your financial wealth. So let's change your perspective. And I'm going to compare, because you're most of here are real estate investors. So I'm going to compare the rent versus buy. So let's look at the rent where you get, say 20K rent. You stay in the rent, never buy a house for 30 years. Your expenses are low, you're not paying property taxes or insurance, you're just paying rent, right? 600K out of pocket for that 30 years, your equity is zero. Let's say if you purchase your first home, which is very small, 225K to 50K, you have principal interest out of pocket for 30 years, which is maybe about 350 to 400K. It created with an appreciation equity at the 30 years later, you are owning this home free and clear. So maybe about 500 to 550K is the clear value of this home, which is owned by you 100%, right? So that's the beauty of it. But how about if you purchase even a bigger home, the second home, which is a luxury home, maybe 750K. I don't think this luxury home is available at 750K anymore. But your out of pocket now with principal interest is more, 1.28 million. But at the end of 30 years, you own more. You have $1.8 million free and clear equity from that home. So this is the comparison. I'm going to compare with the term life. So term is just like your rent for 30 years, even if it's $2,000, that 60K out of pocket is $0 cash value. So the money down the drain, just like rent, no equity, no cash value. Okay. The whole life product, not the infinite, the pure whole life product is like your first home. Say you have about 6-7 thousands for 24 years, but this death benefit is never going to go away. Even if you die 99 years old, this death benefit is still going to give you that $1 million if you have opted for that, right? So about 150K out of pocket. It has about 200K plus cash value, but it has $1 million in death benefits, just like your home. It has some equity, but when you pass actually the free and clear, you actually pass $1 million to it. But let's talk about that on steroids, the infinite banking policy. Now if you overload it, overpay that same $1 million policy, instead of putting 7,000, if you put 20,000 for 24 years, that's about $500,000 out of pocket. You will say, why would I do that? Here is why, because now it has created $1.2 million. Again, point in time example, $1.2 million cash value for you to utilize while you are alive. And now at that point, it has $2.3 million or more death benefit that you can pass. And this is the reason, my friend, that you want to look at infinite banking. By the way, when I'm comparing this home versus the infinite banking, don't forget to talk about the tax and insurance, which is going to be another 500 to 700K expenses on top of it. So when you actually, had 1.2 million out of pocket plus taxes and insurance to pass $1.8 million equity to your next generation, why not think about spending that 500K, $500,000 out of your pocket, have 1.2 million available for you to use it, and pass an income tax-free debt benefit of $2.3 million to your next generation. When I looked at it this way and I created this example for myself, this was my turning point. This is where I was mind blown. So again, I'm going to repeat what infinite banking offers for you: that guaranteed growth, tax-free growth, and withdrawals using the leverage. You can contribute without limit. You can create your own limit. It's liquid for any purpose, any tax. You use it for education, for retirement, build your family home, build your vacation home. It provides you automatic asset protection in most status. It's income tax free to the next generation. And on top of it, you can utilize as a real estate investors, this is even mind blowing. You can utilize this as an and asset. That is, you compound your cash value within the infinite banking system, take a leverage from it, never take that money out, take a leverage from it, invest that money into real estate, and have your same dollar work at two different places for you. And that's the biggest advantage that you can achieve using the infinite banking system. So just historically, who have seen this and repeatedly used this system? John D. Rockefeller, we talked about. Did you know that the happiest place on the earth, Walt Disney had a dream, and he had a dream about theme park. Nobody trusted that dream. The banks especially did not give him the loan. So he went back and he pulled equity from his homes or the rentals, and he pulled his cash value from the life insurance that he had. And that's how he started, brick by brick, the dream that he had. Jesse Penny during the Great Depression, 1929, did not have money to pay payroll for his employees, and that's when, because this is guaranteed growth, never lost money. I mean, we are all real estate investors. We can never say anything that is tied guaranteed to it. We always say projected, but this is really, there is guarantees built into it. It has never lost money, and in 1929 too, he was able to pull out that money to pay for the payroll. John McCain also used it for his campaign. So really, this is what the infinite banking strategy has been used. Philip, I do have few more things to cover. So are we good on time here?
Yeah. Let's
Perfect.
finish.
Perfect. Thank you so much. So let's understand the basics of why infinite banking, because this is what I needed for myself to understand and convince myself on it, right? So it's based on the principle of compound interest. The compound interest, as Einstein says, that it's a wonder, that it's the eighth wonder. One who understands it earns it, and one who doesn't pays for it, right? So typical savers, this is how we do it. We save in your savings account, and whenever we have car expense, or we purchase a rental real estate, or we invest, we deplete our savings account. We again increase, deplete, right? So education, rental real estate, whatever we want to do, either invest or purchase, we deplete our savings account. If we never did that, even if we had, say, $1,000 going in per month, uninterrupted interest of 6%, and we did that for about 20, 30 years, we will have about $1 million more in that savings account, right? So now you will say that, Madhavi, if I never touch that money, how am I supposed to do all this, the education, the real estate investment, etc., right? By the way, the red channel here is what we keep on doing, going up and down in our savings accounts. And that's why we never have this hockey puck growth of the compound interest. The compound interest is a snowball, starts very, very slow, but as it starts picking up, it just goes that hockey puck growth very, very quickly. So that's what we are trying to achieve inside our infinite banking system, right? So where would you use that money? Well, let this grow compounded till the day you die. And whenever you want to utilize this money, have a discipline to take a loan that's leveraged from the system and return it back. Take a loan whenever you have a real estate investment, whenever you have kids education, when you want to go on a vacation, take a leverage from it. And that's why when we're going to see that compounding snowball in your savings, in your bank account, which is the infinite banking system now, right? So you want to grow your money, you want to borrow others' money so you can continue growing that compounded interest, right? That's the uninterrupted growth. That's the principle of infinite banking. That is what we are trying to achieve, right? So infinite banking, like I said, it's a strategically structured, high cash value life insurance when a typical life insurance 100% premium goes towards purchasing the insurance, my way of doing it is that about, you reduce your cost to insurance. So make 1/3 of premium goes towards buying you the insurance, and 2/3 of the value just sits as a cash, pure cash. So next year when the insurance companies comes in and push dividend, which dividend, by the way, you're part owner in that proportion for that insurance company. So when they make the business, by the way, term life, 2 to 3% of the time is the probability that they pay. So they actually make money on term and you lose money. But when you are on the inside and you earn dividend, that's the book of business that's going to get you money, right? So that dividend comes in year after year. And when you have that cash sitting in there, you get dividend on the cash. And that's what keeps on compounding. That cash dividend, it's not taxed because you don't take that money out. And you're not losing to taxes, you're compounding year after year. So this is why the structure is very, very important. It's not your regular life insurance. It's not any life insurance. It has to be strategically structured when you begin, and you can create literally any limit that you want, right? But you would say, oh, it's still a life insurance. I'm not still convinced. Again, change your perspective, guys. It's about growing, preserving, protecting, and passing your generational wealth. So let's talk about the insurance. Why life insurance, right? The cost versus the protection. So let me ask you, what insurance today, if you go back and say that I'm spending this money, this is my cost, I'm going to cancel my insurance. Would you cancel your home insurance? Will you cancel your car insurance? And why not? Because they're protecting your assets. If the hope something happens to home, you need to rebuild that. Something happens to car, or something happens, an accident or something, you want to cover that liability, right? So can you now, if you don't cancel it now, can you cancel it in 20 years? Can you cancel your home insurance in 20 years? No, you can't. Car, maybe if it's an old car, but if I have a new car, maybe I will not. Why? Because home is your appreciating asset and car is your probably depreciating asset. That's not the whole, the answer, but that could be one of the partial answer, right? So what about you? Do you think you are an appreciating asset or a depreciating asset? Let's talk about you as an asset, right? So again, numbers. I'm a very numbers person. Imagine a person of age 40, retirement age 65, earning very modestly 150K this time, income growth 3%, and he or she has a savings of 100K, which every year only 6% of his income putting into the savings account, right? And that whole thing, that savings account is growing at a 6% compounded growth, right? So let's talk about this asset, right? When you are that asset, when you have been earning in that, the potential of this person to bring in that 24 years till the point he retires is $5 million. That's the total income potential of you, my friend. And that in investment that he has on the side that's growing 6% every year is about $10 million. So now let me ask you, if you are your biggest asset, why are you just covering only for 20 years, 30 years with the term life protection that you have? Why not you cover your biggest asset till the day you die? Because as you grow older, your subject matter expert, your ability to pull more income is increasing. So why not protect your biggest asset, and that's you? Can term really protect your biggest asset, right? So this lifetime of savings is not going to come in one day. It's going to come through the pipeline. You're going to have some, tax filter. You're going to have some lifestyle filter. And every now and then we push into two buckets, the safety bucket, which is the savings bucket, and the investment bucket, which will have some risk. And the savings bucket, the important part is it needs to have a tight lid. But the investment bucket may have some evaporation, and we know that we take that risk, right? Some goes to even taxes, right? Now, the intention with the infinite banking system is the savings bucket, put a tight lid on it, and have high cash value life insurance. Remember, I was talking about that additional benefit. Does your bank account provide you additional benefit like a life insurance because you're putting 200K there, right? So now just to do the same savings accounts in infinite banking, you're getting the life insurance. That's a extra benefit. You have the death benefit, you have the cash value, and now you are continue to do your risk managed investments, right? This is the benefit of infinite banking system compared to various accounts, whether it's qualified account, home equity loan, savings account, or even a stock portfolio, that it has ability to have the safety, liquidity, higher rate of return than banks, and the tax smart strategy. And it also protects you, which is your biggest asset, right? So life insurance is the protection. So it provides you savings plus the protection, right? And for real estate investments, when you actually if you buy a rental property and you take a bank loan of 75%, instead of emptying your savings account, that is the infinite banking account, and putting as a down payment, now you can actually take a loan from somebody else, just like a home equity loan, and have 100% leverage into your rental real estate. And that's how this is borrow, not withdraw, where you can have the same dollar do the two jobs at the same time. So this is really the beauty of the infinite banking. You can keep on replenishing it. You can use it for your expenses. You can, use it for your investments as well, but use that cash value and keep on replenishing that. So with that, I'm going to just summarize that your infinite banking is really you living your life insurance. It has never lost money in 150 plus years. It provides you tax-free growth and distributions using leverage strategy, guaranteed returns plus proven dividend. It provides you easy access, any reason, any purpose that you want. There is no limitation on how much you contribute. There is no limitation on how much you can take out, or age limitation, not like 401ks or retirement accounts or even education accounts. You can pass the income tax-free wealth to the next generation, and it provides you asset protection. So with that, I'm going to take some questions, and also, just with what's the next step? This is how the cycle looks like. You can meet with me. We talk about your goals. You create a strategic structure for yourself. You max fund that cash value. You receive dividends and guaranteed growth every year. You continue to grow it without disturbing. You access for any reason, anytime, and you fund and repeat it. So this is going to be a QR code where you can jump actually on call with me, so that you can start discussing your goals if this is something that you would like to take further. I only take 5 clients at a time because this is a complex strategy to educate and to implement. So I only take 5 clients at a time. And with that, I will tell you one thing to conclude, that if whatever you heard today is important for you, that importance is going to go away 50% tomorrow and another 50% tomorrow. And by the end of the year, end of the week, this is going to be 0% importance to you. So your time to take action is not tomorrow, not even today, but your time to take action is now. Take a one small baby step towards, if this is important for you, just take one small baby step. Is just get that on the call on the calendar, so that you can at least start knowing and understanding if this is even worth it to consider, if this is in a right fit strategy for you. So that's where I will, take a pause